What's up, Trust Engine Mortgage Coach community? I am sitting down with Todd Scrima, the CEO of Summit Funding, great client of ours, awesome IMB, and we're going to talk about Moneyball mortgage. This topic has really picked up momentum. Jim Deitch, thank you for the interview that we did. I don't know, it's been a little over a month ago. That video has been watched thousands of times. I get approached about that all the time when I'm out at events from both leaders and loan officers. And so I'm doing a whole series of these. So this one is interviewing a CEO, but if you're a loan officer watching this, we'll break it down to what does this mean to loan officers? What does this mean to regionals? And what is the C-suite doing to really survive the current market and thrive going forward? So Todd, before we just get into Moneyball Mortgage, for anyone that's, doesn't know you, just tell a little bit about your role, your company, and then we'll get into the topic at hand.
Well, thank you, Dave. First of all, it's an honor to be here. You and I have been friends for years and years. I was trying to remember when we met, but it was a long time ago. And I have the highest regard for you because you're one of these individuals that is, I call it grittiness in the business. Like, you're as pumped up about this business today as you were 20 years ago. And I admire people like that. So I started Summit 28 years ago, and I was a loan officer. We started out as a broker, 2000 became a banker, and then grew into a mid-sized company. And I think that this time, Dave and I were just chatting prior to pressing the record button, and it's a time where there's all this fear and anxiety, and it reminded me of a time back in, I was maybe a year and a half in as a loan officer back in '94, and rates went up 2% in 2 months, and our home sales, where I live in Sacramento, California, went down 80%. And there was no more refis because rates went up. And I was scared. I mean, I was closing maybe at the time 3-4 loans a month, and it went down to 1. I remember at a month I closed 1. And I was self-coaching myself. And I said, this is not going to work, right? Even though I just came out of college and I don't need that much money, I need more than 1 loan. And I said, who is the best salesperson I know? And I just knew this guy a little bit. And I called him and I said, hey, you're the best salesperson I know. Can I have 15 minutes? He says, yeah, come on over. So I went over the next day, and I was like, hey, I love this business. I want to stay in this business, but I'm scared. Like, I don't even know what to do. Like, I'm paralyzed. And he says, double your sales calls per day. And I said, yeah, but what do I say? He says, I'm not telling you anymore. Just double your sales. If you were doing 10, do 20, maybe do 30. And I said, okay, so time's out. You're not talking to me. He says, no. I said, if I double my sales calls every single day, and I write it down and I prove it to you, will you meet with me again? He says, yeah. And so the reason I tell that story is I believe that these times that we're in, although they're super crazy, they build, like, I look back on that, and there's a few stories I have like that, but that changed my whole world. The next month I went back to him, I had originated 8 loans, most I had ever done in the worst market everyone's like, it's the worst market ever. So learning new skills and asking for help, I think, are 2 things that are things that we should be doing in today's environment, for sure.
Yeah, learning new skills and making some real transformational shifts. So I put a quote on social media today from Winston Church Hill, which I think everyone's heard it, but I think it's a good reminder to frame this call around Winston Churchill's quote, never let a good crisis go to wait. And then a little footnote under that, because every crisis has a transformational opportunity sitting in with it. And I really do believe, especially in the IMB space, there is an opportunity right now to make a transformation. So let's break down Moneyball. I want to remind the audience. So first of all, if you did not watch my interview with Jim Deitch, the one that kind of started this whole series, I'll put a link down below. It's like a 35 minute interview like this one. but Jim is doing what he calls top tiering, and the top tiering has anything to do with how many loans a loan officer is closing or what their volume is. It has to do with profitability to the organization. So, in this case, there was 435 loans that were profitable on a per loan basis of $2,400. And he says almost every IMB has some version of this, and there's always a top tier that are really profitable, even in this brutal market that we're in right now. And then there's a middle tier. And he said, sometimes they're making a couple hundred. In this anonymized study, they were losing 366 alone. And then he goes, and then there's a bottom tier. And remember, it has nothing to do with how many loans they close, how much their production is, because they're losing all the money. And some of the companies that are either, going out of business or having a forced merger, he's like, this is what's causing it. It's like this bottom tier. And then I asked him, like, what's the difference between the top tier and the bottom tier? And he's like, concessions and conversion. He's like, and here at Trust Engine, we like obsess over this. Like, this is just a prettier version of what I just showed you and a little more graphical. But by the way, if you're a loan officer, guys, you don't want to be in the bottom tier. If you're a branch manager, you don't want to be in the bottom tier. This is not a market to lose money. You are not valuable to your organization. And by the way, I always think of price concessions is like your sales fitness score. Like, if you have among the least price concessions in your company, you're selling value. You're a value salesperson. If you are selling price and you have a lot of concessions, you're not. So, by the way, before I go to this next slide, Todd, anything that you want to comment or validate around those, top tier, mid tier, and bottom tier?
So I watched, Dave, I watched Jim and yours interview, and Jim is dead on. What we do with that data is all of our branch managers, they get a P&L by loan officer on exactly those things you just showed. And it shows you, and it's very counterintuitive. We started doing that about 8 years ago. And what you find sometimes is the branch manager is shocked. He's like, well, I don't get it. This person did 10 loans. You're saying that we lost money. And I'm like, okay, let's go through the math. The math is on a spreadsheet. Like, oh, I didn't know that they did 30% bond. Oh, I didn't know that they led the branch in concessions. I thought they just needed more concessions because they did 10 loans. And so, but what's the amount of those average concessions? So there's a lot. First of all, what you're doing with your program is excellent. And it is math, but mortgage companies are ran by salespeople, right?
Yeah, right.
And so, you have to dig into the details in very simple terms. And I want to be super direct. I'll tell you two things. Number one, we're in an industry that's gone in the last year or so for an average gain on sale of, say, 400 basis points alone down to 300. And the industry is struggling because of lack of volume, but it's also, you take away 25% of the revenue on a loan, now you've got a volume problem and a revenue problem. And that's a double whammy. And so people are like, how come these companies are doing layoffs? How come they're changing the bonus structures? How come they're doing it so that they can survive, right? Because they're doing it with lack of volume that's gone way down about 65% from the high, and you have margins got down 25% or more. That's a double whammy, and it's creating a lot of problems in our industry, period.
Well said.
Dave, I was just telling this story. So I had 3 companies that I talked to in the last 60 days, and they want to shut down and for us to take over their sales force. We couldn't make any, even if we laid off all their people, they still lost money. I said, guys, you don't have a deal here. And that's just the reality of what's going on. It just is. And it's hard to, my dad told me, my dad was a pretty good entrepreneur, and he said, son, one day it's going to happen. I said, what's going to happen? He said, something you never imagined. And he says, there'll just come a time where the whole world is flipped upside down. And if you are aware of it and you don't have debt and you have plenty of cash, you'll be able to take advantage. But if you're like most businesses and you were just making it okay as it was, and then that event happens, it's going to be really, hard or impossible to survive. And here we are. I don't know what you thought, Dave. I thought the financial crisis, like I remember I was sitting in front of my TV when CNN was announcing that Fannie Mae got taken over by the government. And I was white as a ghost. My kids came home and said, Dad, what's wrong? I said, well, I don't know if I have a company. Right. And of course, so I thought that was the event, but it wasn't. It was now.
Yeah, what some very wise words there for all you loan officers listening. This is a time, first of all, to double your prospecting. Fanatically prospecting has never been more important. To upgrade your skills, to not lose money. And I just want to break down this with you because I've had CEOs that were surprised by this, but not too many. But almost every loan officer that watched this video that gave me feedback was, and we're talking like some $100 million producers were like, wow, I did not, actually, this is not the one I wanted to show. This is it. A breakdown of the funnel. And actually, this is I have a couple from Jim. I want to show this one because this shows the different stages from first touch to, started a loan where costs start happening. And if it never gets to a RESP app, like it costs the company a lot of money, so loan officers weren't that surprised by that. They were surprised at the cost of concessions. They're all like according to Optimal Blue, the average pricing concession, which not talking what number of loans have a concession, but just average concessions in their, again, they're 40+% of the market is like 80 basis points. It's expensive with most concessions. So they were shocked by that, but then they were shocked by the withdrawn, like, hey, you lock in a loan and you have a withdrawn loan and, you've got recovery on gain on sale. You've got salary time. I mean, we're talking, look at this, in this particular anonymized case study, like in the funnel, in conversion, a company is losing 99 basis points. What are your thoughts on that? And how many companies, because you're a company and you're looking at companies that are looking to sell, you've got a lot of friends. Is that pretty common that there's,
yes, at
least 50 basis points being wasted, if not up to 100?
100%. I mean, I see that the graph that you showed, and when I watched the podcast, companies that are, I mean, it's hard for everybody. So I don't want to be pompous on this podcast. It's hard for everybody. You have to control those things. You have to. And what I find, and again, this is for loan officers, this is for executives. They don't want to make the hard decisions. One of the gentlemen that I brought up earlier that I was doing the numbers, I said, Bud, why didn't you make the cuts? And he looked right at me, we're on screen, and he says, I couldn't lay off my friends. I said, Bud, I understand, but it cost you your company. And it did. So I know these are hard choices. They're brutal choices, and they're not choices we have had to make in our industry's been on really a 20-year run that was, I really think it's a 30-year run. Like there hasn't been that many hard times. It's like always before, the purchase market be doing gangbusters and refis were slow, or vice versa. Now it's both. And it's a double whammy and price compression. So it's a it's like the nature show. The cheetah doesn't go after the fastest gazelle. He goes after the gazelle that has the broken hoof. And I know that's mean to say, but you have to make hard decisions. And people are just not willing to do it. And I see companies still that haven't done the cuts. And I'm like, I mean, I hear some numbers that are crazy to me. I mean, they're losing so much money. And it's all, this next 6 months is going to be chaos, total chaos. I can't tell you what's going to happen, but it's going to be scary headlines. So my intent is not to spread fear. I don't like people who do that. But I think we have to be a realist. We're already down 50% in the number of loan officers in the business. And people think there's more to come. So whether you're a company, whether you're a loan officer, you gotta pull it all out right now. Someone called me last night, a friend of mine says, "Hey, what are you doing?" I said, "It's 8 o'clock at night. I just got home." He says, "What are you doing 8 o'clock at night?" I said, "Buddy, I'm working like I just got out of college, because that's what's required right now. I got to run to the fire, not run away from the fire." And I know a lot of people say they do that. I don't see a lot of them doing it. Executives and loan officers can't. It's not a time to mince words. It's not a time to patty cake.
Well, I have two recommendations, strategies that don't require cutting staff. I think most companies have made a lot of cuts, and any cut that they'd make now, they're cutting bone, and they're starting to risk the organization. I mean, I'm sure that everyone hasn't, but here's a couple thoughts. I'd love to get your thoughts on this. I'm going to do it in 2 chapters, and then we'll just go freestyle for the rest of the conversation. But like, this is the bucket. I want every manager and every loan officer to think of your pipeline, your current loan pipeline, from first touch to close loan. And like, first of all, know what the leak in the buckets are. Know what your conversion leak, no RESPA loans. How many fit into that category? How many you got a RESP app and you converted it? Like, know your conversion. I mean, Todd, that's something that, you've preached your entire career and obsessed over with your loan officers. Know what, withdrawn loans are, know what concessions are. And so that's one thought. Another thought is, make sure you're really clear on, how do you lose less loans in your current funnel? How do you reduce your concessions? And then, of course, above the funnel, monitoring and managing your database. That's something we do here at Trust Engine, but I don't think enough lenders turn their data into dollars at scale. If you're a loan officer on this, know where you fit. Are you in the top tier? Are you in the middle tier? Are you in the bottom tier? If you're an executive on this call, make sure you know where your loan officers sit. And by the way, I had Brian Hale and James Heck on a panel at Housing Wire. And he's like, you got to check this daily and weekly. He's like, I had one of my top branches. It's historically a top tier, and there was some changes in product mix and, some cost changes, and they went from here to here, and you got to know that quick. And then, Todd, this is where I'm going to pause and get your feedback right after this. I think we need to flip the switch, and this is my Moneyball algorithm. Like, let's put number of loans closed, volume closed at the bottom, and let's put conversion at the top. Like if every, regional leader, branch manager, loan officer really said, hey, we want to look at conversion, we want to look at concessions, and we really also want to start looking at, turning data into dollars. And we made this an algorithm, and we scored loan officers, and we really started measuring these things. Like, most companies could pull another 20 basis points out of their funnel. So I'm going to pause real quick. First of all, do you agree with that thesis? Any thoughts on that thesis?
Yes, 100% I agree. I think that just saying that is one thing. And then the question is, how do you fix it? So if you think about it, the company, like there's a choice for all companies and loan officers. Either you get out, either you suffer until it gets better, or you decide to change. And so those are the three choices. So let me just give some thought to that. If you, there's no doubt that our industry is being commoditized. And commoditization means when the consumer starts looking at the product or service as equal amongst your competitors, then you become commoditized. And the only thing to do out of commoditization is one of two things, or a combination of the two. So it's either lower price, or you add more value, or a combination of the two. So I'll tell you a quick story around Kia Motors, just because it's outside of our industry. Back in 2008, they were selling about 230,000 cars a year in America. And so they did this poll, and they were like, why aren't our cars selling? They're so much better priced than the competitors, and they work really good. Well, they polled some consumers, and the consumers were like, we don't, it's a newer brand, and they're cheaper, and we think they're going to break down. So Kia Motors went back and they said, we're going to do something crazy. And I'm imagining the boardroom meeting where they're like, you know, everyone offers a 50,000 mile warranty. We're going to do 100,000. We're going to be the first car company that comes out with 100,000 bumper to bumper guarantee. And I'm sure the boardroom was mixed, like, you're crazy. That's a great idea, whatever. They did it. Their sales almost quadrupled within 5 years. So that's them adding more value. And I think that mortgage companies really struggle with that. And I think loan officers really struggle with that. And it gets very confusing. So how do you create more value? And so that's a whole nother discussion, but I think it's important for people to think about, like, this is just one example. One of the value creations, now when I say this, I'm not trying to promote my company, it's just an example, okay? Where I recorded a bunch of videos on wealth building, taxes, and personal budgeting, and how to understand the stock market, and all kinds of stuff. 80 hours of content. And we now, whenever we pull a credit report, they get emailed a short video and a login to the system for free. And we tell people, hey, this is like a $5,000 value. Now, we find that since we've started that, 80% of people actually watch the video, but only 30% watch any of the content. But the perception is, hey, this company is adding some value. So what are we going to do to add value? And I think it's where people get stuck. They're like, well, if you think about it, Dave, another way of saying it is, if two loan officers are vying for my business, then which one should I use? If you don't want me to focus on price, then what is it that you're doing different, or that at least appears unique? Sometimes it's not even adding more value. It's just making it obvious what you do for them. And people really this is a whole marketing and branding conversation and value add conversation. And people they get stuck. They're like, well, they should use me because I'm a good loan officer. I've been doing this 10 years. Man, that's your job, right? That's expected. That's like, I wouldn't go to a restaurant and expect you to give me late service or bring me a steak that's cold. That's your job. So, but people get stuck with that value equation. And it's something that I've been promoting a lot because I don't think people understand it. They're like, I'm a good loan officer. People should just use me. Not really how it works. You have to tell them what you're doing for them. You have to show them.
Yeah. And I believe we're in a new era, because you've been doing this a long time, like I've done it. And, you know, my first 5 years of the business, rates were over 10%. I've been doing this. This is my 38th year or 39th year, but rates have gone down my entire career, and they went down to 2%, and they're never going to 2 again. and we had back-to-back years where they were at 2% and 3%, and we did 8 trillion in mortgages. 63% of mortgages start with 2 or 3%. And so I think by the very nature of that, loan officers need to go beyond selling rates and fees, and tell me if you agree with this. Well, I know you agree with this because you're a partner of ours and you outfit and make MortgageCoach available to your loan officers. But just like I said, my entire career, rates have gone down. My entire career, like, speed to lead was enough. Like, if you were just the first one there, you won. Now, I am not here to say speed to lead is still not important. I just think there's something as important, and there's an elevated access of success. And by the way, the term is speed to need. Like, who can get to the consumer and really get to their needs and solve their needs first, and does it and anticipates the needs of a consumer. So here's the deal, guys. We have this 10x challenge that we do. And if you go to trustengine.com/10x, I have our 10x for all platform. But we know, because we have the data, that this fee worksheet right here is costing lenders a fortune. Like NFM did a study, and of their 93 loan officers that use MortgageCoach versus the 319 that don't, the ones that do are 65 basis points more profitable, and they have a 10% higher conversion rate. And guys, we've done this with dozens of lenders. Like Church Hill actually just did this, and because they have so many of their loan officers using MortgageCoach, they picked their top 30 MortgageCoach users because it looked like they were doing a TCA with every credit report. And look at this, guys. In the month of September, 41 basis points more in gross margin. And so, Todd, here's the question, because I know you've got loan officers that use MortgageCoach. You got loan officers that are still doing this. And here's the deal. Like, if you give, especially in a market like this where rates are high 7s to low 8s, if you give people options, like, here's an option with 2 points, 1 point, 0 points. This could have been with a buy down, without a buy down, with a seller buy down, with a 2-1 buy down. And then you show, like, hey, I got you. When rates are going to come, they're going to be down. They're going to be in the 5s again. Don't know if they're going to ever be in the 4s again, but we'll refinance. So couple things here. One, you're optimizing purchase power. And 2, you're giving people options, so they're going to be less likely to grind. And then, Todd, when they do, by the way, that's speed to need. Like this is speed to lead. This is speed to need, like anticipating that you need to show them options, and you need to show them that, hey, I'm going to refinance this and I've got you. And then this is also speed to need. Like, when you do get grinded, most loan officers will start negotiating, well, an 1/8 in rate, a 1/4 in rate, 3/8 in rate, which, by the way, that costs basis points. It's super expensive. But what if, when you do get grinded, you showed, hey, here's my loan versus the loan that's let's say it's a 0.5 point lower in rate, but you show the cost over 12 months. And now, instead of negotiating with rates and basis points, you negotiate with dollars. Like, oh, how about $1,000? $1,000 in concessions is a ton less money than a 1/4 in rates. So first of all, Todd, you've been selling your whole life. You've been managing salespeople. Do you agree negotiating with dollars is better than basis points? I'm pretty sure you're going to agree with that.
100%.
Now, how do we get more loan officers to follow these best practices so they're optimizing their profitability and they're optimizing purchase power with buyers?
Yeah, so everything you're saying is dead on, and let me frame this up a little bit. The ability to really understand marketing and then really understand sales is super important right now. I'll give you a quick example. 30 years ago, if Dave, you and I were on a trip and you said, hey, let's treat ourselves to a nice steak dinner, I would probably go down and talk to the concierge or the person running the front desk, and I'd say, hey, where's a good place to eat around here for a steak? And they would give me a referral, and we'd call them and we'd make a reservation. Tonight or today, you and I go on a trip and you say, hey, let's treat ourselves to a nice steak dinner. I get on Open Table and or Resi or something, and I make
And
a
I'm on
reservation.
Yelp. By the way, you're on Open Table. I'm on Yelp, and we're triangulating.
Yes.
I don't want to steal your thunder, but I'm
No,
tracking
you're
that.
exactly right. But here's my point. If you look at those two stories, one is walking downstairs and talking to the concierge. One is jumping online and using some tools and getting a reservation in 2 minutes and knowing that it's a 5-star rating. That's different. How we consume information, social proof, all of these things, it's different than it's ever been. And what you're talking about and what your tools do is allow someone you've done it for them, and they just got to follow the process. But I think loan officers don't use it because they underestimate. They're like, I've been using the fee sheet for 20 years. It's fine. No, it's fine for you because you've done it 2,000 times. The aesthetics, just the aesthetics of, say, Mortgage Coach, it's different. The other loan officer's not doing it. And they're like, oh, you're giving me 4 choices and you're showing me you're going to refinance me later at no cost for $1,000 different. Yeah, okay, let's do it. Right. You have to know these things. And that part of the issue is, Dave, and that's why I say skill development. You have to throw yourself into this stuff on your own time. Don't do it during work hours because we got to sell during work hours. But on the weekends, don't be afraid to spend 8 hours studying Mortgage Coach. Don't be afraid to study marketing and sales. And there's lots of videos and tools out there, and really educate yourself. Because if you don't, and if we're going to continue to do business the same way, it's not going to work for most people.
Yeah, so let's just you and I list off everything that's different, because I love that you brought up. I actually hadn't heard someone use that analogy that, hey, back in the old days, you would have gone to the concierge. And by the way, nowadays, sometimes, like if I'm in a good place, I'll check with the concierge, but I trust my ability to look at Yelp and Open Table, which are my two kind of go-tos, more than the concierge. So even if the concierge tells me something and it's at the Ritz-Carlton, I'm still like, what's best for me? And then here's what's also different. Not only do we have more debt in the history of America, we're over $1 trillion. Not only that, but if I actually was shopping for a home and I said the word mortgage outside in my house, or I searched for something, every time I'm in Facebook, every time I do a Google search, I'm getting rate quoted. I'm like omni shopping, like it's different. And what else is different? 63% of mortgages in America start with 2 or 3%, and rates are at 7 or 8%. So guys, it's time for change. It's time for Moneyball mortgage. So let's transition for the rest of this conversation, because I know you're an elite sales trainer, you're an elite coach, and I know you're doing skill-based training. You're doing, I've seen you on social media. I mean, you're doing more training than you're ever done. So I'm not going to ask you to give away your trade secrets to other lenders, but anything you are willing to share, my goal is to elevate our industry. Well, by the way, my goal is everyone who uses Trust Engine, who monitors their database, who uses our platforms, has a competitive advantage. But what are you willing to share? Like, what's your playbook?
I don't. So let me, long time ago, 25 years ago, I went to this leadership training, and the training used, there was a phrase that they used, and the phrase was "give to live."
Like that.
When I started coaching people, I made the conscious decision, nothing's a secret, and I'm going to help every single person I can. I don't care if I was just on the phone with a competitor this morning, and I told them exactly what we do on something, because I think if we all approach life with less fear and more willingness to help people, life is good. So I do a training, Dave, to answer your question. I do a monthly training teaching loan officers how to do all of the marketing, like sales funnels and the social media stuff, like not super complicated, how to reach more consumers, how to do all these things. And then sales best practices as well. But where loan officers miss the mark is the marketing piece. And so I teach them every month how to do this. I average 500 loan officers on those calls. 500. Wow. Those are live calls, okay? Then I record them and send them to them. Only 20% of those loan officers are mine. So I'm coaching the competition. Now, I'm not asking them for money. I'm not telling them to sign up for coaching. I don't do like loan officer coaching anymore. I mean, so people like, why are you doing that? I'm like, because the last time I checked, it's give to live. And your heart has always been that way as well. And I think when you find people like, if you're real, I think the key to life is if you're super good at something and I'm really good at marketing and sales, then I should share that. And I should ask for help in other areas of my life, which is a lot that I need help with. Loving relationships. Like I don't hesitate to call Robin Lavasser, who you know is our EVP of sales. I call her all the time and ask for parenting advice because she's got 5 great kids and my kids are younger, right? I think that's one of the keys to life. So if you want to attend that or get a recording of that, you could, probably the best thing to do is text me. I'm not a big emailer and all that stuff. If you text me, I will send you that recording and send you the invitation. You can attend that. And I do it because I want to help the industry. I truly, you know, Dave, you reach a point where, like when I first started as a loan officer, I just wanted to make money and help people. Then it transitions, like I'm 53 and I don't know, something about that magic number of 50. You're way older than me, so this is a while ago for you, but that was a joke.
I caught that, bro. I was getting ready, like, what? What? I was like computing, like I was like, is he throwing down on me right now?
No, but I think it changes where you're like, hey, I want to go out this earth and people say that person was a giver. You know, I just finished a book last night. Quick story. Friend of mine, I met in college, and then our kids went to, we always lived in the same neighborhood. Then her kids from kindergarten through high school went to school with my kids. And a year and a half ago, she unfortunately died in a plane crash. And I went to her funeral, and her twin sister wrote a book about it. So I just finished the book last night as I'm crying at 10 o'clock at night in my bed. And I went to her homegoing celebration, and they had to move it from a church to a basketball gymnasium and it filled up the entire gym. It was crazy. I'm talking thousands of people. I want to be that person. And the only way you get there is you're not going to get there being stingy. I don't think.
Well, a couple of messages I want to give to anyone watching this. First of all, CEO, head of production. You know, when I first started the Mortgage Coach YouTube channel over 15 years ago, it was to put on the best sales meeting in the mortgage industry every Tuesday at 9 o'clock. You know, and I still, you know, here we are many years later, you know, try to put on the best sales meeting in the mortgage industry every Tuesday, 9 o'clock, because the industry needs leadership. Yeah, I mean, I wanted people to sign up for Mortgage Coach. I wanted to grow Mortgage Coach, you know, for sure. But at the end of the day, I wanted to create transformation in America. You know, I still, like, while I am a for-profit entrepreneur, I am a purpose-driven entrepreneur that wants to change how people get into debt in America. I do believe that, you know, like my philosophy, your hashtag is give to live, and my hashtag is always be coaching. You know, like always go beyond the transactional experience and be a coach to people. Show them options, show them strategies to achieve financial freedom. You know, always be coaching. You know, I think I need to get a shirt on that. But you reminded me of something, because I saw Robin a couple of days ago at Renee Rodriguez's AmpCon event. And one of the speakers, his name was Jefferson Fisher. So, by the way, guys, he is one of the best things going on Instagram, like social media for good. Have you ever watched one of his videos?
No.
Yeah, he's got he's a practicing attorney. He's got 2.8 million followers on Instagram and over millions on TikTok. And he does these 1-minute videos on just how to communicate better, like how to respond to inappropriate questions, how to handle embarrassment, how to deal with takers. And he just got these little 1-minute pieces that are like value. But my takeaway from that presentation, and the reason I tell you that story, little amplify move there, is his takeaway was like, give free value, to everyone. The more free value you give, the more successful you'll be, the happier you'll be. And by the way, it's for all you loan officers listening. It's also a great way. Like if you want to create great content, it's not about you. It's about the value you can give. So anyways, I applaud you for all that education you're doing. We'll put a link down below for anyone that wants to learn more about that. Let's go into closing thoughts. My push is getting more executives to play Moneyball mortgage, be more focused on conversion. Like I would love to see scoreboards, leaderboards at companies where it's like how many loans they closed, what their volume was, what their conversion is. It might be a reach to put price concessions just because I realize that that's a can of worms,
No, I think you should.
Okay, good. So what's your push to the industry then to, like, if we want to turn this chaos into opportunity and have transformational shift in the industry, how can we get more executives to, play Moneyball mortgage and have that level of transparency and that level of accountability? Thoughts?
Well, I think you said it, and Jim said it in the podcast you did, is you publicize it. We do. And our concessions are nowhere close to where you put on that screen. Now, I compare my P&Ls to other private mortgage banks, and they're like averaging 50 to 70 basis points concessions. Can't do it. You can't do it. Like your revenue starting point is already down 100 bips. And then you want to price concession everyone to death? It doesn't work. So yes, scoreboard it. Yes, publicize it. Yes, go over it. At the very minimum to your branch managers. But I would do it company-wide. So my closing thoughts are one big thought, because I think we got to stay strategic. You pulled up the Churchill quote. Tony Robbins, one of my favorite quotes is, nothing's ever as good or as bad as you think that it is. And so to give you an idea, to take that a step further, if I took anybody, any loan officer, and I said, hey, you're going to have a 30-year career, 30 years doing mortgage loans and having fun and helping people. Now, here's how it's going to break down. 5 years, you're going to double, triple, quadruple your income. It's going to be the craziest thing you've ever seen. There's going to be 5 years out of 30 like that. There's going to be 5 years that, man, you're full of self-doubt. You got to learn new skills. You got to read books, go to seminars, ask for a bunch of help and coaching, because your income is going to be horrible. And then 20 years is going to be pretty damn good, like decent, normal market. You're able, whether it's 200 grand a year or 2 million a year, you're like, hey, I'm doing really well. Okay. Would you take that deal? And if you ask people that, they always say yes. Well, you're just experiencing 2 or 3 years in a row of the bad years. And then what's going to come out of this is a bunch of good years. And logically, that makes sense. But you have to feel that way in order to see it as an opportunity. I had, I tell you one more example of this, just happened last week. So we have Summit, there's $30 trillion of equity in America. Okay. So we made some deals with 2 different life insurance companies to do non-QM 30-year fixed seconds. And they're pretty damn good. I'll go up to 90% loan to value, down to 620 credit scores. It's a great product. So I had one loan officer, been working for me for 25 years, and he tells me that's stupid and I'm not doing it. And he's doing, now used to, for years was a big producer. Now he's averaging 2 loans a month. Another young kid I hired, in the business 6 months, took my advice, was on my training, did a little sales, like a little sales funnel on social media, got 1,700 applications for that product. 1,700.
Wow.
So one guy is stuck, one guy is not. So if you're stuck, you have to get unstuck or you're going to be out. And it's a choice. It's a choice. You just got to make it.
Oh, man, I'm not going to try to add anything to that. That was a great closing thought. And just a push to every leader in America, get out there, get on stages, know who the loan officers are that are not only incredibly successful, closing a lot of loans, doing a lot of volumes, have great conversion rates, don't have a lot of concessions, they're profitable, and share best practices on that. Play Moneyball Mortgage. Follow Todd. Thank you for your leadership, Todd. I appreciate you as a partner to Trust Engine. Just a reminder to everybody, follow the Mortgage Coach YouTube channel. That is best practices for loan officers. Follow our Trust Engine YouTube channel. That is innovation for innovators. Innovating. I'm interviewing innovators and leaders, mainly a C-suite conversation going on. Todd, I appreciate you, brother.
You bet, guys. And listen, if any of you want an invitation or the recording to some of that stuff that I mentioned, feel free to text me. People think I'm crazy giving them my cell phone. Don't call me. I'm not asking you to call me. It takes me 2 seconds to text stuff. So my cell number is 916-769-9031. Just tell me, hey, I heard you on Dave's stuff. Can you send me some of that stuff? And I'll happy to send you that information, because at the end of the day, we're all going to be better together than apart. And I don't know, maybe that sounds Pollyanna, but Dave, you've always acted that way to me and others every single time I've seen you for years and years. And I think that's true leadership. So thank you for everything that you're doing.
Appreciate you, brother. Take care, everybody. Hope you got value.